Financial policy number 2. It's not that complicated, but I'm going to break it down for simple little bits so that you understand what it means to you and your real estate investment. Good day, Toronto. Welcome to episode 11 of Prime Properties TV. In this episode, we're going to be talking about the second financial policy that Bill Morneau implemented. Okay? Now, before we get started, make sure you understand how mortgage insurance work. And if you don't, click on the link here in the video that I talked about it, okay? Now, the second policy that kind of got implemented, it kind of frankly just got swept under the rug behind the stress test. Not many people know about it, but it is coming to effect November 30th, okay? Now, what this policy does is basically the Canadian government is doing one of these. They want no more in insuring properties that are way overvalued, okay? And because they're worried about how much debt we're in and where the market's going to go. So remember, the Canadian government pays the bank in case you don't pay your mortgage if they bought insurance, right? Remember the other video. Now, they're implementing policies and saying that, hey guys, we're not going to insure any of these mortgages anymore if, and here are the criteria, okay? If you have less than 600 credit score, and your property is over the value of $1 million, and some other minor things. But those are the two main ones. Now, what does this mean to you as a buyer? Have your 20% down payment. If you have your 20% down payment, none of this affects you anyways. As a seller, you know what? Maybe some less people can buy, but being in the higher end, like, you know, a detached home is about $1 million now. People already over leverage. Maybe they're gonna have their 20% down with most of the people I'm working with anyway. So I don't think it's gonna affect the market too much in my professional opinion. But what this does mean for interest rates is, again, Canadian government is worried about how much debt we're in. If the banks aren't going to get a double win situation, whether you as the end consumer pay for the interest and the bank and the mortgage, or the Canadian government pays for it, then the banks are probably going to be reconsidering what their policy is going to be. Maybe they have to increase the mortgage rates a little bit on the higher mortgages. Again, I don't know. These are just some speculations, okay? Now, if you learned something in this video or you just simply enjoyed watching it, make sure to click on the like button down here and subscribe to PrimePropertiesTO. If you have any questions, leave them in the comment section. Our team will do our best to answer them for you. And remember, make sure you share this with your family and friends because an educated consumer is the best consumer. Thank you. I'll see you next time, Toronto.